Hello and welcome to this week's episode of The Capitalist Investor. As always, you have me, Diamond Hands D, and we got Tony the Tiger, and in again for Luke Dave Abate. What's going on, man?
Great to be here. Can't wait to do it, boys.
I knew you were excited. When I asked you, man, I've never seen somebody jump
He jumped
out of
at
their
the
chair.
chance.
Oh my
He's
gosh.
like, heck yeah, I'll get on that podcast.
I've been waiting.
Been waiting for the call. All right. Well, this obviously we look for different topics to talk about every week, and this one jumped right off the page at us. Basically it was a Fox Business article about retirees consider returning to work, during this inflation squeeze, and that is an extremely interesting topic, obviously for us. Because, a lot of people in retirement are living on somewhat of a fixed income. So when that fixed income stays relatively fixed and the price of everything that you need goes up, that can obviously cause problems for those retirees. So it looked like just a couple quick numbers to set the table here. Social Security did increase 3.2% this year to start 2024. And it was, it did get a relatively sizable increase back starting 2023. But still, 27% of people, retirees, Social Security is their only income, and it averages about 40%. It averages about 40% of people's overall retirement income in retirement. But during this article, essentially they were saying about 62% of retirees were struggling to make ends meet, and 19% were delaying retirement just solely because of inflation and the prices of everything going up. So yeah, what do you guys think? Inflation, obviously, very real topic. We've been talking about it for a long time now. What are your thoughts?
All right. So I looked through this article. It was from like Motley Fool or something like that, and they came up with a statistic. Social Security is not keeping up with random inflation, because since 2021, food and shelter's up 20%, energy's up 40%, and I don't think that Social Security is up that much. Now the stock market's up 42%, but bonds are down 15%. So I don't even know if portfolios are keeping up with inflation, to be honest. And then the article went on. This is where the disconnect comes, is the average Social Security paycheck is somewhere around $1,900 a month. The average retiree expenses are around $4,800, is what they say. The gap, the difference between those two numbers, is $3,000 a month. So using the rule of 4% distributions from your portfolio, this is basically telling me that like millionaires are having a hard time keeping up with the rising cost of inflation. Yep. Because you've taken out 4% of $1 million portfolio, that's $40,000. But then I also looked up what's the average savings in retirement, and it's like the average retiree has $350,000. So there's a lot of disconnects here. Like, I'm sure a lot of people fall into like their expenses, but at the end of the day, we spend what we make. That's an American way. Yeah. And when things start escalating 5%, 10%, 20%, it's hard. It's hard to come up with that money. So what happens is you take your standard of living takes a decline, right? You can't do as many things, you can't buy as many things, or you just sit there and rack up debt, right? And that's not healthy either. So this is a big problem. I don't know where or when the rubber hits the road and when it becomes a crisis, but it's a big problem. A lot of things are up a lot of percentage, 20 to 40% in the last 3 years, and that sounds like roughly 7% inflation every year on everything around us.
So this topic to me feels like a continuation of the periodic stories or research you see coming out from some of the retirement plan providers indicating like, hey, there's a huge retirement readiness crisis ahead of us, right? This is kind of the next chapter. And Tony, to your point of like rubber hitting the road, I feel like this is the rubber hitting the road. Like these people are having some anxiety. There's a shortfall in the ability to pay, the monthly bills due to the inflation increases, and now they've got to go to Plan B of how are we going to fund this, right? So we're going back to work. So the rubber really hits the road to me is there's a silver lining here in that it feels like it's never been easier to pick up part-time income with the gig economy and a side hustle. Like there are a lot of ways to be creative to get some extra income. I think where the car breaks down, we'll go back to that analogy, is when the willingness and the ability to actually do those things goes away. Because right as we age, our health normally typically starts to decline. Can we actually take on that extra job to meet the gap? Like that's when I think the car actually breaks down and now you have a irreparable situation.
Yeah, should we complain for a minute about fast food prices? I was scrolling through Twitter the other day, and over like the last 3.5 years, like the price of everything on the McDonald's menu is up like 200 to 300%.
Yeah.
Like I don't know how those places stay in business, honestly. Like we've talked about it before. I wouldn't go to McDonald's regularly, but maybe a couple times a month. Like I can count on one hand how many times I've been there in the last 3 years.
Yeah.
Yeah. But it's like I missed dinner. I'm really hungry. Mm-hmm. I'm driving by a McDonald's. I'm like, yeah, I did this a couple months ago. I think I went on my get off my lawn segment. I stopped. I got a quarter pounder and it was like $8. Yeah. I'm like, I remember when they were giving 2 for $4 or 2 for $5 or something. It's like, holy cow.
And then you add on like the great service you get along with that increased price, and it's just a great overall value package. So that's a great question. How are they staying in business? You tell me.
I mean, they have to, now that everyone needs to make more money and minimum wage continues to creep up, they gotta increase the prices. I mean, I understand the metrics behind it, but I don't know. Eventually, there's gonna be 3 people working in there making the food, and everything else will be a kiosk, which is transitioning to.
Yep, it really is. And like your point on service, like you almost have to like use the app to put in your order because if you just tell it to them, it's gonna take like 10 minutes, and they're probably gonna mess it up. So at least if it's in front of them, then you have a good shot. But yeah, but before if they didn't put in your medium French fries in the bag, you were, upset about it. But now it's like a $4 mistake. It's
you crazy. Might be turning around and driving back to pick that up.
Yeah. Exactly.
I don't know. I saw something. Again, like Twitter's an interesting place, or actually, what do you want to call it? It's like there was somebody who's just like, just remember what they did to us, and somebody showed like a receipt from Taco Bell.
Yeah, I saw that.
And from like 1999 or something, and it was like $5 got you like 7 tacos, like the gourmet tacos, right? Like
whole bag of food, man.
Yeah, like a chalupa and Mexican pizza. Get down with it. So,
yeah, it's just gotten crazy out there. It really has. The $20 Taco Bell orders, just nuts. But yeah, it's something that honestly we haven't really had to deal much with in the last 15 years at all. Something we've really never talked great lengths during financial planning meetings. Hey, you got to prepare for inflation, things like that. So it's definitely a newer risk. So it's something you have to plan for. And if prices continue in this direction, hopefully the inflation slows down a little bit here. But we really still haven't seen, price decreases. We still see that 3.2 to 3.6% inflation rate every month, it seems. So it's something that's just not going to go away. So something that we do have to plan for, and you have to adjust not only your whole plan but your investment strategy. Lots of things need to adjust to account for that.
So I mean, so just to get back on the food thing, do you really think that like, Red Lobster went out of business because of the endless shrimp thing that they had. Like that's what they said. Like, hey, we had to file bankruptcy because like everyone ate all buried us on the shrimp.
Mm-hmm.
I don't know.
I believe it. I mean,
why don't you just get rid of that stupid promo? Like, you could end it at any time or something. I don't know.
It checks out.
You think so? I don't know, man. Maybe I'm crazy. Anyway,
I think they were losing money on a lot of those tables.
Yeah. All
right. Well, inflation, something you definitely have to keep an eye on, as we've been talking about.
If you're doing your financial plan on your own, you got to account for it.
Yep.
If you're, working with your advisor, and maybe it makes sense to increase it to 4%. See how your plan reacts. Maybe that's like a what if scenario.
Yep.
Maybe not a base case. But just know that, again, at the end of the day, I talked about it on maybe one of the other shows, is like, right now 5% interest rate on CDs and things like that are great headline numbers, but they're really, at the end of the day, you're not really chugging ahead.
Nope.
You have to be diversified. Unfortunately, you have to be involved in the market, because that is, at the end of the day, the ultimate inflation hedge, at least historically. So,
yep. Excellent points there. And thanks, everyone, for listening this week. As always, if you have any questions or comments or show ideas, send us an email to info@swpconnect.com, and we'll talk to you next time.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.